Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at using the large degree trend with an example from the USE minis from yesterday. But first we start with our risk disclaimer. Just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at a losing trade in today's video. So as such, all professional traders must know, understand, but more importantly accept that losses can and will and do unfold no matter what trading approach you take. Right, this is a 3-minute chart of the NQ, the Nasdaq mini yesterday, which was April the 30th, and I'd like to have a look on it's a day session only chart. This is so from 9:30 to 16:15 New York time. So I'd like to have a look and see how we view trading this in the context of the large degree trend. Remember, MTPredictor is not a black box system. We don't blindly follow all our setups. For example, with our MTP trend, which is blue for up, black for in the process of making a reversal, and red you can see there is for down. We basically want to see when the market pattern is clear, because we understand that markets are basically random half the time. So 50% of the time the markets are random, and we'll contrast the NQ yesterday with the ES yesterday as well. So what do I mean by when a market is not random, in other words a clear picture? Well, for this we look to the higher time frame chart. So if you're trading off a 3-minute chart, the higher time frame would be the 15-minute. If you're say trading a 4-hourly forex, the higher time frame would be the daily. If you're trading daily stocks, the higher time frame would be the weekly. So I just want to show you what unfolded yesterday. So how do we define whether the picture is becoming clear? Well, I just want to go back into about here somewhere yesterday. Basically, we use our DPs on our higher time frame chart. So you can see the day before, if we go back to this previous pivot here, you can see that's the last swing into the low. We right mouse click here to DP, and that gave an area of potential resistance. As you can see, the previous day that caught that high really nicely. This was actually a 5-wave sequence into the high as well. So yesterday we basically go back to the last important pivot, which would have been this one here. You can see the market would have gone well below that DP there. So of course that one was no longer in play. So where do you go back to previous to that? Well, you go back to the next important or next major swing pivot, and as you can see that was that last major pivot there. You can see it's a pretty significant pivot. Also because this was a 5-wave sequence, we go back to the start of the 5-wave sequence. So you go back to here, you right mouse click, you place the DP on the chart, and as you can see that gave you an area of potential support. But can you see at this particular point in time, in fact we were doing a live training webinar here, and I was saying the market pattern at this particular point in time is random. In other words, you don't quite know where it is, because it had gone through this DP. It wasn't really coming up to this DP, it wasn't in a clear picture, but this support level was on the chart in advance. It was there ready for you. So let's turn training mode off and see what yesterday did. As you can see, it actually went down and actually caught the low of the day absolutely perfectly in our potential support zone. So can you see how that prepared you for potential support in advance? In other words, before the market even got there. So what does that mean for your 3-minute chart when you're trading? Well, as you can see, there's your 15-minute support zone, nailing the low absolutely perfectly. I'm just going to take that one off because that's no longer relevant. So because we hadn't reached this support zone, the market trend would have been either random or down when there was a potential buy set up here. So you'd have been avoiding this one because the picture wasn't clear. Even though if you're just looking at this on our MTP trend, you may well have decided to take this, but that's why we don't look to just our MTP trend as if it's a black box system. We want the market pattern to be clear. So in other words, at this point in time here, it wasn't clear because it was going down, hadn't reached our major support zone. Now compare that to a bit later in the day where the market rallied off this support zone absolutely perfectly. There you go, clear support there. The market rallied off the support zone. Largely trend was there deemed to be up. That coincided with our MTP trend turning blue. Everything was coming together to tell you that the market trend was up, and therefore this TS3 buy setup was a good one to take. If we right mouse click here, do analysis, remember we use correct position sizing to keep our initial risk small and under control, in this case less than 2% of a sample $20,000 account, but you can set up different accounts and different currencies if you wish. So that would mean a risk of using 3 contracts. The market went up to the first target, you can see there very nicely, where a profit of 3.6R would be available. The market then came down a bit later, and you can see there was a history triangle here, so there was another potential buy setup here. You may well have taken this as well because the large degree trend would deem to have been up. This time the position sizing would have given you long 4 contracts, but this was a losing trade. And this is what I said at the start of the video, that losses can and will and do happen. So this should have been taken in long, the market reversed back down and stopped out. Guess what? Losses will occur, and this is part and parcel of any trading approach. The trick is keeping the losses small. So here, this would have been what we deem as 1R or minus 1R loss, a 1R or 1 risk unit loss. Compare that to the previous profit back here, and that would have been a plus 3.6 or 3.6R profit. In other words, this profit was 3.6 times greater than this loss. So can you see that overall for the day, you'd have actually had a profitable day because the profit was 3.6 times greater than the initial risk. In this case, putting in about $1,300 and taking out about $380. So in other words, a profitable day. But the whole point of this video is to show you that when the picture becomes clear. Now compare this with the ES. There's some analysis I was doing here yesterday. If I go out to the 15-minute chart, here the market was going down. It went through that DP. So at this point in time here, when we were doing our webinar, we said the large trend looked to be down. This looks here to be again a 5-wave sequence. You'd go back to the start of the sequence here to see potential support, and obviously it didn't get there. Now this wouldn't be a great 5-wave sequence because this started sort of mid-trend. In reality, the last major low was down here. So can you see I'm starting to struggle a bit in trying to decide where the trend is. There was a pivot here, but that was sort of in the mid part of a trend, so that wasn't a great one to take. Yes, it did catch the low, but that would have been fudging it a bit. So it wasn't really clear which pivots to take because there weren't any major swings here to give you a clear signal. So on the ES, the picture wasn't clear. Compare that to the NQ, where we had a clear major pivot to take a DP off that gave us our DP support. The market then went down and caught that perfectly and then rallied up. So in other words, the picture on the NQ here was really nice and clear. So this is what we're looking for. We're looking for like almost when the fog clears. So we're looking to trade or do your analysis when you get a clear picture, but avoid the times when you're umming and ahhing and you don't quite know what was going on. And this is what happens in trading. Half the time, or slightly more, the markets are in this random phase and you don't quite know what's going on. This is why I think so many black box systems fail, because they don't take account of that the markets are basically random or unpredictable just over half the time. So this is what we try to do with MTPredictor. Avoid the unclear times when you're unsure what's going on and wait to the times when the picture becomes clear. When it does, then gauge the large degree trend on your higher time frame charts and then look to take trades in the direction of that large degree trend, and then looking for profits that are large and losses that are small. So a good example of this unfolding on the US E-minis yesterday.